In the equity quadrant, taking a look at the June S&P futures, we've got a pullback going on, but the S&P has been consolidating since it reached its all-time high record close on May 24th. In that time, we have had 2 positive sessions and 3 negative sessions, and we are down a total of about 0.91% over that period of time. Today, we never really got positive in the S&P with a high of 53.24 and the close yesterday 53.2475. It was actually down 0.01% on the high today. You look at the low, 52.7875, that was down 0.86%. And with a little bit of time left in the session, we're still down 0.55% or a little bit more than a half of 1%. Taking a look at the earnings scorecard so far, with 96% of S&P 500 companies having reported earnings, 78% have beaten EPS, 61% have beaten on revenue. Now that's not unusual, but the blended year-over-year earnings growth rate for the S&P 500 currently sits at 6%. If 6% ends up being the actual growth rate for the quarter, it will mark the highest year-over-year earnings growth rate reported since Q1 of 2022, which was 9.4%. So it's a long period of time. It's still a positive, but it's not anywhere near as good as Q1 of 2022. Also, only 41 S&P 500 companies have reported positive EPS guidance. 60 have reported negative. So it's really a mixed bag. And that mixed bag is helping to keep the cap on yields, while Treasury yields have been pushing higher along the curve due to some of the Fed speak that we've gotten. So obviously the higher yields are a little bit of a strain on the equity markets, especially when you look at the CME Fed Watch Tool and see that the September rate cut has gone to November, and last week it was a 47% chance of it happening. Right now it's a 44% chance. So it keeps edging a little bit lower, putting more pressure on the S&P 500.